Hello Business 202. This accounting video demonstrates the setup to solve exercise 1522 on accounting for available-for-sale securities. The problem statement is that Murdoch Inc. purchased the following available-for-sale securities during the year 2015, which happened to be its first year of operations. Also, the market price per share of each of the shares purchased, the Cable, the Horizon, and the Roundabout TV Inc., are shown. Our job is to provide the journal entry to adjust the available-for-sale security portfolio to its fair value on December 31, 2015, and to show the effect of that journal entry on Murdoch's financial statements using the financial statement effect spreadsheet that you see at the bottom of this spreadsheet. Before we can make the journal entry, what we must do is to calculate the total fair value of the portfolio at December 31 and compare it to the total cost of the portfolio at the time the individual stocks were purchased. So, let's indicate the cost of the portfolio. Cable was purchased for $100,000. Horizon was purchased for $75,000. And Roundabout TV was purchased for $120,000. To add this column, we should prepare a formula. To begin a formula, press the equal key. And we should enter a function. In this case, sum is the function to add a column. Show the left parentheses, point the cursor to the first number in the column to be added, click and hold the left mouse button, and drag the cursor over the cells that should be added. When you release the left mouse button, enter the right parentheses in the formula. Now the formula is complete, and the answer will appear when we push the Enter key, like this. So now we know the total cost of the portfolio is $295, and that agrees with what we have in the problem statement. Now, let's find the fair value. To find the fair value, we want to take the market price per share times the number of shares. So let's enter the number of shares for Cable, 2,000, the number of shares for Horizon, 750, and the number of shares for Roundabout TV, 3,000. And let's enter the market price per share for each of them. $45 for Cable, $90 for Horizon, and $50 for Roundabout TV. In the middle column, we want to calculate the fair value for each of these shares, and to do this, we will enter another formula. Go to cell E20 where you want the answer to appear, and begin the formula by typing an equal sign. We want to multiply the number of shares, so click on the number of shares, and multiply that, enter an asterisk to signify multiply, the market price per share. Click on cell O20. When we push the Enter key, the result will appear. So 2,000 times 45 does give $95,000. The second formula, we would want to do the same thing. Enter an equal sign to start the formula, highlight or click on the number of shares 750, enter an asterisk to signify multiply, and click on 90, the market price per share, and when we push Enter, the result appears. So 750 times 90 produces $67,500. We could repeat the process for the next stock, Roundabout TV, but Excel has an automatic copy feature which is unique. If you click on the cell that you want to copy from and locate the square at the bottom right-hand side of the cell, when you move the plus cursor to that cell, it changes shape like this. That closed plus indicates Excel can copy. If you click and hold the left mouse button and drag that formula, it will copy the formula contents like this. Click and hold the left mouse button, drag down over the cells that you want to copy to, and when you release the left mouse button, the formula and the execution will be copied. Let's check that out. 3,000 times 50 gives you 150,000, so we did that appropriately. Now, let's add all three of these cells together to get the total market value. Start the formula with a equal sign, type the word sum to indicate add, enter a left parentheses, point to the first number that goes in the column, click and hold the left mouse button and drag to the last number in the column, and then enter the right parentheses to close the formula. When you push enter, the sum will appear. Okay, there you have it. The fair value of the portfolio is $307,500 and the cost is $295,000. The difference, enter a formula for the increase or decrease in cell J25, click on the fair value at the end of the year, enter a minus to subtract, and then point to the cost in cell J25, push enter to see the result. So the portfolio has increased in value $12,500. This represents the basis for our journal entry. So we can enter an equal sign and click to that increase. Likewise, for the credit side of the entry, we can enter an equal sign and push to the debit side, push enter to guarantee that we have equal debits and credits. Now, what are we going to call this? This is a unrealized gain, and so this is going to represent an increase in the valuation allowance for available for sale securities because we want to increase the asset account, and for the credit we want to show this as an unrealized gain on available for sale investments. Okay, there you have it. So here is our journal entry, and that satisfies part 1. For part 2, we want to show the effects of that entry on the financial statements. The valuation allowance adds or deducts from the asset account, so since we debited the valuation account, we would want to increase the value of the assets, $12,500. Also, we have credited this account unrealized gain on available for sale investments. And so in this case, what we have increased is not earned capital, but unrealized capital, also known as accumulated other comprehensive income. So we will enter a positive $12,500 in that account. So the total effects that you will have on the balance sheet from the entry that you see here is to increase the assets by the allowance for fair value, $12,500, and to increase the caption unrealized capital, or AOCI, for $12,500. That's it. Give exercise 22 a shot. Thank you.